Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, June 12th, and I want to welcome you to our special SpaceX edition of the show. Let's cue the intro.
3, 2, 1.
SpaceX is going public today, and we are going to cover this historic IPO, the biggest ever, from every angle. We're going to bring on a space industry analyst for a technical discussion on where SpaceX will have to go from here. We also have an expert on retail trading coming on the show. That is going to be a massive part of this story. So we'll get the latest on how everyday investors are thinking about it. But I want to start by bringing on our Elon Musk reporter, Theo Wayt, to set the stage. He has been covering every inch of this IPO in the run-up. And I also want to bring on our crypto reporter, Yueqi Yang, because there has been some buzz in that arena, too, about this IPO. Theo and Yueqi, welcome to the show. It's great to have you back.
Good to be
Theo, here. I want to start with you. Okay, so $135 a share was the price. This is kind of what we were expecting. What's the latest on who is actually bought into this IPO?
So it's about 20% retail, which is extremely high for an IPO, but is actually less than some people were thinking a few weeks ago. And then the rest is, gigantic sovereign wealth funds. BlackRock is buying at least $5 billion. Basically, everyone is pouring money into this thing and trying to fight each other to hand over even more money.
And Yueqi, I mean, literally everyone. This kind of includes the crypto community, right? I mean, you had some great reporting this week on crypto investors trying to get into this.
Yes, there's this new type of crypto product that allows investors to bet on the valuation of pre-IPO companies, and these are called crypto perpetual contracts, which are a form of derivatives that allow people to speculate on the price of something without actually owning the underlying assets. So on Binance, on Hyperliquid, these kind of new products are slowly taking off. There's for the SpaceX crypto perpetuals, people are trading it at around $168, and that's about more than 20% higher than the SpaceX IPO price of $135. So people are saying that this is a new mechanism for price discovery from the crypto market that shows how much interest there is in SpaceX because it provides a price level that indicate that shows how much people are willing to buy and sell at.
Well, and Yueqi, this is kind of interesting because, I mean, Theo, you talked about the demand here. We know that every retail investor that placed an order for this, I mean, they're not going to be, they have not been able to get these shares that they ordered because of the fact that it's so oversubscribed. So Yueqi, I mean, this is on a sort of a side way that you can get exposure to this asset. Are there risks here? I mean, perpetual futures, we know that they pose some risk to the crypto industry as a whole, right?
Right. So this is totally different from owning the actual underlying shares. You're owning no underlying assets. It's literally based on thin air. It's not based on any underlying assets. It's not pegged to anything. It is just providing a way for people to trade on the price, on the number itself. And perpetual futures itself comes with leverage. So there's also risk with liquidation if price does drop. And then there's also the risk of liquidity because a lot of these products are new. They're relatively thinly traded. On Binance, I saw that the past 24 hours, there's about $1 billion in trading volume, which is rising, but it's still not widely traded comparing to the more popular products like Bitcoin perpetuals.
So, Theo, is there anyone who is who has come out to be a seller in this scenario, or I mean, anyone who is, I guess, short SpaceX or who has openly talked about?
There's a lot of punditry, the usual suspects, Jim Chanos, Michael Burry, people like that. There was a big Paul Krugman, the columnist. He wrote a big Substack about this today. There are a lot of haters that are willing to criticize SpaceX, including people on the show sometimes. But I'm not sure if anyone is brave enough to like immediately open a short on the first day. I mean, that would be extremely risky considering the amount of, retail people that are trying to pour into this stock and the fact that, the Nasdaq 100 index inclusion should happen in about a month, which is going to lead to another round of forced buying. I mean, I think longer term, there will certainly be shorts. I mean, there's going to be these lockup periods that will expire throughout the next year that will, potentially give people opportunities to short. But I don't, I would be very surprised if there were some kind of gigantic short that someone was opening today.
Hmm. Yueqi, have you been tracking the prediction markets at all? Are they making use of this moment?
Yeah, so on prediction markets, there's also bets related to SpaceX. On Polymarket, they're offering investors outside of the US to bet on the closing market cap of SpaceX. And right now, it's showing that there's about 78% of chance that SpaceX will close at above $2 trillion valuation. But then the probability drops to around 50% for it to close at more than $2.2 trillion valuations. It's important to know that these are markets that are only open to non-US investors. You cannot make this bet on US platforms such as Kalshi. And the reason is that the nature of the bet itself resembles too much as securities contract. And in the US, that will imply that the prediction market is offering these contracts could potentially run into security laws violation. So these are not events that you can currently bet on as a US users for now.
Right. And we should say that we're taping this shortly after 11 o'clock Eastern. So depending on how things change when you see this, the numbers and predictions may differ slightly. Theo, where is Elon Musk today? What do we know about where Gwen Shotwell is going to be celebrating the occasion?
So Elon is in Starbase. They had a broadcast this morning from there where he gave a little speech. There were a bunch of Elon fans here in New York that were kind of camped out outside Nasdaq, hoping to catch him. But unless he gets on the private jet soon, he's not going to be here. But Gwen Shotwell, who's the SpaceX president and kind of the number two under Elon, as well as CFO Brett Johnson and a number of other kind of key execs, were at Nasdaq this morning and are in New York today. Um, they also gave some speeches, and there's going to be a big party at the JP Morgan Tower, I believe. So all the bankers and stuff are ready to celebrate too.
Great. Well, Theo and Yueqi, I want to thank you both for coming on. That is Theo Wayt, our Elon Musk reporter, and Yueqi Yang, our crypto reporter, here at The Information. SpaceX's technical ambitions are quite tall. To unpack the current state of the technology itself, I want to bring on Tim Farrar, president of TMF Associates. Tim, welcome back to the show. It is so great to have you here. It is the first time that we've had you on since the S1 dropped, and we got a lot of new information in there, although we reported a lot of it here at The Information as well. The one thing I wanted to start off with is Starlink. You and I were texting, and you pointed out to me that ARPU, average revenue per user, has been coming down per the filing. Why is that? Walk us through your analysis.
Yeah, so I mean, Starlink started offering 3 second terminals early this year and offering discounted packages for people who want to use their roam package. So when you go traveling and you take a second terminal with you. So that's had the helpful effect of boosting the subscriber numbers that they're reporting, but it also brings down the ARPU because those people just aren't paying very much. So what we saw in the first quarter is that SpaceX didn't add as much revenue in the Starlink business as they might have hoped. He added a whole bunch of customers, about almost 1.5 million customers, and that was great in terms of what it said in the S1, but the ARPU came down a long way. And now what we're seeing is sort of a reaction to that. They've been raising prices in May. They raised prices in some ways again today. Clearly, they need to boost revenues from those customers. And it's going to be really interesting to see if their subscriber growth really keeps up with what people are expecting.
So are you prices are coming up? I guess from your analysis, my question is, if you equate today's price increases, sounds like, or the price increases we've seen with the impact on demand, per your calculations, are you expecting ARPU to come back up?
I think the ARPU will hopefully stabilize a little bit, at least beyond the second quarter. But the real question is whether they add as many subscribers in the second quarter as they have done in the first quarter. That's by no means guaranteed after these price increases. We did see the company go out there and announce that they got to 12 million total customers last week, but that includes a whole bunch of government and enterprise customers who, very helpful for them, but that's not the consumer headline number that is reported in the S1. And so we'll see at the end of Q2 if that number on net adds is as good as people hope, because everyone's out there talking about how Starlink's going to have hundreds of millions of subscribers in a few years' time. Is this just an air pocket? I mean, I think Gwynne Shotwell was on TV saying, oh, well, we're running out of capacity in some areas. I mean, I think that's an excuse for some people. Other people would give the excuse that, well, maybe we need to ramp up production and we're going to make some new terminals in the next few quarters. Maybe that will help. But at the end of the day, if you start charging more in a competitive market where you have to win customers from the existing broadband providers, you have to win them from Comcast and AT&T, and we see analysts out there downgrading the telcos and saying Starlink's going to catch all these customers. Well, they're not going to do that if they're charging $55 a month plus another $10 for the terminal rental, which is what they're charging at the moment.
Now, this question of the threat that Starlink may or may not pose to telcos is interesting. You've written a little bit about the T-Mobile contract. What's the status of that contract?
Well, there on the direct to sell, I mean, Starlink reported over $630 million of revenue from Starlink Mobile last year, and that slipped by the radar for a lot of people. But if they're going to grow from that, you've reported that the T-Mobile contract's only about $100 million in total. That contract's up for renewal in the next few months. I think a lot of people think that's going to be renewed in July. But Starlink need an awful lot more than $100 million to report an increase in Starlink mobile revenues this year. They probably need to increase the size of that contract by at least 5 times, maybe as much as 10 times. And T-Mobile's out there saying, well, no one wants to pay for it. It's a tiny proportion of our traffic. I mean, clearly that argument is going on pretty vehemently between the two companies about what they're going to pay. And I think T-Mobile's arguing, they're teaming up with AT&T and Verizon for that matter to avoid Starlink trying to go around them. I think that argument is probably going to be won by T-Mobile at this point in time, because Starlink doesn't want to just pick up its ball and go home and say, yeah, sorry, we're turning off the service because we can't reach agreement on price.
And when does that contract come up for renewal?
Well, Musk has said on X that the contract is exclusive for 12 months. So I think a lot of people have assumed that contract is due for renewal in July this year, because that will be 12 months after they launch the service commercially. We don't know that for a fact, but I think the expectation is that they want to try and get more revenue to report this year. And so they're going to push for an increase in the size of that contract this summer.
So price is one element of the Starlink equation. The other element, of course, is cost. What do we know about the way the costs are trending to produce these satellites, to get these satellites up there? We'll talk about Starship in a minute, because ultimately, that is what we'll need to work out here. But just in terms of margins, what analysis have you done there?
Yeah, so I mean, Starlink, every satellite it launched last year, which is over 3,000 of them, it costs them about $1.4 million per satellite to get those, to build them and get them into orbit combined. That's an amazingly low number compared to what you see for other providers of broadband communications. And it just illustrates how far ahead Starlink is and how difficult it will be for other people like Amazon to try and compete. But at the end of the day, they have to build more satellites, they have to add more capacity, and they have to build the terminals. And it looks like the terminals cost them something in the order of $300 each to produce last year. They're subsidizing those terminals pretty heavily, which is why the latest price increases are focused on charging people $10 a month for a terminal rental fee. And that is the area of biggest weakness. People say you're going to have 10 times more capacity with the next generation satellites, going to have them vastly cheaper to launch with Starship. Yeah, all well and good. But at the end of the day, when you're acquiring these customers, you have to give them a terminal. And if that terminal is costing you several $100s and you're subsidizing that, it limits your ability to go after the really low ARPU customers. I mean, it's going to be really interesting to see if they get into India eventually, and that obviously has just been delayed. But if they eventually get into India, where people pay maybe $10 a month for broadband, typically as an entry-level product, you can't afford to be giving away a $300 terminal to get those $10 a month customers.
Right. Now, what about the Starship aspect of this equation? What is remind us here of the current roadmap for where Starship is, where it needs to get to, and then eventually when you think that will end up having an impact or could having an impact on the Starlink business.
Yeah, so they're obviously going to progress further with Starship this year. What it says in the S1 is that they don't need the full reusability in order to start launching these next generation of Starlink satellites. That's great. That's exactly, allowing them to get on and do this before they fully made this reusable. But obviously, it's a lot more expensive if you're going to be throwing away the second stage every time you do a launch, and it's going to limit your ability to launch really, really frequently. So they'll definitely be trying to do some experiments with launching the next generation of Starlink satellites later this year, and into next year they'll probably try and ramp that up. But their priority next year is probably going to be to build out the next generation of Starlink mobile constellation, put that $20 billion of spectrum that they just acquired from EchoStar to use, and the broadband system probably comes beyond that into 2028 and possibly 2029 before they have a lot more of those satellites launched on Starship.
Tim, as you think about the capabilities that SpaceX may have to acquire, it certainly has not been shy of acquisitions, not just in the space sphere, but otherwise, as we know. What acquisitions, specifically related to the launch business and Starlink, do you think you could see them making in the next 12 to 18 months?
Well, I think that they've got an awful lot of the technology there that they need. They just need to perfect the whole thing, and they do this iterative development, which destroys a lot of things and blows a lot of stuff up. But at the end of the day, advances the technology way beyond what other people have achieved. I think their biggest issue now is going to be what do they do about launch sites, because if they want to be launching these orbital data center satellites, everyone talks about how those need to be in sun-synchronous orbit. In other words, they're constantly in sunlight because they're at sunset on one side of the planet and at sunrise on the other side of the planet. And so they're going to need new launch sites. They can't launch to those orbits effectively from either Texas or Florida, where they've got their current Starship launch pad. So what I'm going to be watching really closely is to see what they do about the launch pads. There's a lot of rumors about them buying land in Louisiana. And that's going to be a good place to do this because there's a lot of open sea to the south of that, which would be perfect for these sun-synchronous orbit launches. I think that's where acquisitions are going to come, is building out more launch sites in the future. Obviously, lots more money to be pumped into all of that. And it's going to be an expensive business. It's going to burn a lot of cash.
Great. Well, Tim, I want to thank you for coming on. That is Tim Farrar, president of TMF Associates here on TITV. Now, for more on what the retail investor is thinking as SpaceX hits the public markets, I want to bring on Tom Sosnoff. He is the founder of Tasty Trade and CEO of Lost Dog. Tom, welcome to TITV. It is so great to have you on the show. I want to start by asking you about the retail allocation. So we know that it looks like retail investors have gotten a smaller proportion than what they initially thought they were going to be allotted. What did you make of that?
It's hard to say. So I'm a retail investor now too. And so I put in myself and I got I was surprised actually. I got a little more than I thought I would get. We always put in for more and hope for something. And so I got some. So I it's hard for me to say. Most of my friends that I talk to got something. We get nothing. So we got something. So I'd say it's better than usual. I guess.
And maybe just remind us, Tasty Trade, Lost Dogs. These are lost dog, I should say. My apologies. Just walk us through the premise of the businesses first.
Well, I built two. I built actually Thinkorswim was my first retail platform, which is now owned. It's now Schwab's primary platform. We were bought out by TD Ameritrade, and so I built Thinkorswim, which it still exists today. It's one of the biggest trading platforms in the world. And then I built Tasty Trade, and that was bought out and by IG Group in London. And I just left to go build Lost Dog, which is not a brokerage platform, but it optimizes your career and your portfolio type stuff. So it's just a cool piece of software, and we're in the process of rolling it out and launching it. So I have 45 years as a market maker and building brokerage software, and then 7 months building Lost Dog.
Okay. So talk to me a little bit about, how you then measure retail sentiment. I mean, the narrative of this IPO has been, got a bunch of Elon fans out there. They want to get in on it. That's why the retail allocation was bigger than most IPOs. But I mean, how do you even quantify that? How do you think about what impact that tactically has on the stock price, if at all?
Well, I am long past believing Elon is just a great guy. Okay, he's not on my what we call good billionaire list. I'm actually not a fan. But that said, I think he did a brilliant job by talking about the distribution to retail investors of getting an enormous amount of press and PR from this, from this IPO. So I think as far as like a master class in getting, probably the best press that any IPO has ever got, I would say this is it. Now I know it's the largest IPO too, but I think that this has truly been a masterclass in free PR. And listen, that's kind of what it should be. When you do an IPO, it should not go to, all the big institutional investors and things like that. It should go to the consumer, because the consumer cannot participate along the way. I mean, you have to be an accredited investor. You have to give away a lot of your upside if you participate prior to the IPO. And then you have to hold on to the stock for 6 months and all this other stuff. So the retail investor really doesn't get to participate until the IPO, and they shouldn't have to pay, some marked up, IPO price. I'd rather see them participate on the actual price.
Right. So, I mean, just walk me through this. And you said you did buy some amount of SpaceX shares.
I was allocated some, yes.
You
And so
allocate. Okay.
yeah, yes.
Right. Um, and forgive me here. Allocated. Does that? I mean, do you not purchase it at the IPO price?
No, no,
When
no,
you say
no. You
allocate-
purchase it. You purchase you purchase it at a price. It's not live yet. That's
Right.
all. So
Right.
it's like,
Right.
but yes, I have relationship at, a couple of different financial firms, including aside from our own. And I just asked for an allocation, and that was it. And one firm came back and said, okay, we'll give you a small allocation.
Okay. But you intend to buy it at that price that you were allocated?
Oh, I'm going to absolutely buy it at that price, and I'm going to sell it the minute it opens. Maybe.
Well,
Yeah.
that was my question. Are you at all? Is any part of you a holder at all of this stock?
No, it's not. I'm not. And the reason I'm not is because, like I said, I think SpaceX, more than any other company I've ever seen, has two things that I don't like. It's the Elon Musk effect, which is basically, this is his show. There's nobody else involved, and there's a huge single point of failure here for that reason. I'm not a fan. So
Because what? Why?
well, one, it's kind of a joke, but he did build a Cybertruck, which I don't think anybody should ever have to drive. But the real reason I'm not a fan is that when you're the world's richest person, I don't think you should take the initiative to cost 270,000 civil servants their livelihood, and that has bothered me ever since the start of Doge, and I cannot forgive him for that. So like I was one of the first people that drove a Tesla. I mean, I embraced it from day one. I think I had 3 Teslas from like 2014 on, and when he did that, I just I sold my car at the market and basically gave it away, and I didn't care, and bought a Lucid. I'm not going to support people who I don't have any respect for. And
Right.
so I'm not interested in investing in him. But I will tell you, I'm an option trader. I'll trade the crap out of the stock next week, stock and options, because there'll be tons of opportunity in there, and I'm going to put on lots of positions, but I'm not going to be just a net long delta buyer. I'm not just going to buy stock.
Now, my colleague Corey Weinberg, he had a story out this week looking at how Nasdaq
Mhm.
won the listing, or how
Yep.
they secured the listing. One of the things he pointed out, of course, was that Nasdaq said that they will accelerate the ability to be included in the index. S&P has not. He had an interesting bit of reporting that he actually talked to a data provider that assesses sentiment online, on social media and stuff like that. And basically, what the service found is that people are not thrilled about the fact that Nasdaq said that they are going to fast track the ability to be included in the index. What is your view on whether or not that should or shouldn't happen?
I can understand why I can understand why Elon use the leverage that he has to do that, because from his perspective, he's got to fight for what's best for SpaceX. And I think in this case, the quicker that they get added to the Nasdaq, I mean, obviously that forces all the index funds and all the passive index funds to have to rebalance their portfolios into, to buy SpaceX, and the sooner the better. So, from his perspective, I think this is a hard one for me, because I don't like the fact that the Nasdaq caved. The other side of it is that the real reason I don't like it is that A, it adds a lot of concentration risk to the offering, and B, I think that it forces 401ks and it forces passive index fund holders to maybe forcing the stock artificially higher in the short term. And I think, listen, time will tell, but I hate the fact that they're going to be forced to buy in the first, whatever it is, couple of weeks, as opposed to letting the stock kind of find its own level, and then maybe be added to the index.
Right. Tom, when we hear about the retail allocation, and like you
Mhm.
said, you are a retail
Yeah.
investor now, and you just indicated to us that you're planning to sell the minute you get a chance. I think at least the way we've talked about on the show, we've sort of equated all retail investors to be this giant group that are fans of Elon Musk, mostly because they're so loud online and they're loud on social
Sure.
media. Um, as you think about this group of retail investors, I mean, it strikes me that that's not the case, and I wonder if you have a sense for what proportion
Oh,
of this group of retail investors support or don't support Elon. Like, what is the sort
I
of
don't think
make?
I don't think it's the case at all. In fact, I think so I live in the retail investor space. I mean, I literally have built, you know, two two or three companies, and all we don't even take institutional accounts. It's 100% retail. Um, Retail investors are really smart, and they are highly sophisticated investors. Contrary to what people think, they are light years ahead of institutional investors from just a different perspective. And I would argue that retail investors are opportunistic. This is not a question of, and especially like I just can speak for myself and my own friends and people I know. This is not a question of us wanting to participate in the offering because we think we want to invest in Elon. This is just what we see as an opportunity. Retail investors don't always get an opportunity to participate in an IPO, and here's an opportunity. And I also think that next week, when they launch options, this is going to be, a very volatile, very interesting, and really opportunistic stock. And I think it's going to be actively traded, it wouldn't surprise me if this becomes the most actively traded stock for the rest of the year.
So then, if that group of retail investors is not the uniform group of Elon fans that I think
Yeah.
maybe some have made this group out to look like, then why then was it so important for Elon and for SpaceX to have the retail allocation so big?
Like I said, I think it's a great story. And I think that one of the things that Elon does is he really knows how to play to on the public relations side. I think it was a great marketing. I think it was a great marketing kind of play. And I mean, ultimately he knows that this stock is going to be. He's forcing by getting the Nasdaq to add the stock early. He's forcing their hand. He's forcing the institutional investors to buy in no matter what. So why not get as much press on this as you on this IPO as you can? And he did an incredible job of that. He basically made this the top story, on every single financial news network for the last couple of weeks, and it will go on into next week. So, I mean, it's worth tens of billions of dollars of marketing spend, branding, PR spend. I think it's a brilliant play.
Last question for you, Tom. We've also got OpenAI and Anthropic probably coming down the pipe,
Yes.
maybe in the next year or so.
Yeah.
Uh, we haven't seen any of the financials, although if you read our coverage, you can get a pretty good close look at what they are here at the information. But are you thinking of participating in any or eventually buying shares in any of those companies at first glance?
Well, I did participate in an earlier round in OpenAI as an investor,
Okay.
from privately when early shareholders were selling, that kind of thing. So I am an investor already in OpenAI. I don't know if I'll participate it really depends on, how they structure their IPO. And in Anthropic, I have no participation. We've been offered it over the last couple of years because they've had many offerings, over the last, let's say, 2 or 3 years. I always thought it was overpriced, just like I did OpenAI. I thought those were overpriced too, but it turns out in hindsight, I was for sure wrong.
Hmm. Well,
But
Tom,
you're asking, will I participate? You know,
I'm just looking for your assessment on that.
yeah,
You got these three big IPOs. Uh,
probably I will. If I have the opportunity to, and I think it's tradable. I'm a trader. I'm different. I'm not a long-term passive investor. I'm a very active trader. So, as a trader, yeah, I'll participate in anything. As a long-term passive investor, am I buying OpenAI or Anthropic on the offering? Not a chance.
Great. Tom, I want to thank you for coming on. That is Tom Sosnoff from Lost Dog here on TITV. We will have more SpaceX coverage on our website, so be sure to stay tuned to all of our newsletters and reporting at theinformation.com. But before we go, I do want to get to a big non-SpaceX story that we published exclusively last night. Software companies like Figma and Canva at one point considered Anthropic to be a partner to them, but now things have gone sour as Anthropic's new AI tools and features are now meant to compete with them. Joining us now with the exclusive is the Information's AI reporter, Stephanie Palazzolo. Stephanie, welcome back to the show. Tell us what's going on between Anthropic and their partners.
Yeah. So this example that you just touched on is just one of many, I think, that are coming up as Anthropic increasingly moves into the AI application layer and is coming up with apps in spaces like legal and finance and design, and basically competing against their customers and partners that buy models from them. So the specific example that we really highlighted in yesterday's story was the launch of Claude Design. A couple months back in April. So this tool basically helps users come up with, presentations and designs and software application prototypes, things that people might use other apps like Figma and Canva to do. So we have reporting that, in the weeks leading up to this launch, Anthropic had maybe been, holding its cards a little bit closer to the chest than it had in the past, according to people who were involved in these conversations between it and the partners for this launch. And essentially, Anthropic had kind of told these partners, like Figma and Canva, that the Claude Design product was going to be fairly basic. It was kind of just meant to be an extension of existing capabilities, and it wasn't going to have advanced features like advanced, collaboration or the ability to kind of edit AI generated designs, which are things that Figma and Canva offer. Then, as it got closer to the launch, these partners found out that actually this new product would have some of those advanced features. And, around that time, Figma basically dropped out of talks to be a partner. And you saw the Figma CEO, Dylan Field, make this kind of tongue-in-cheek comment at a event saying that Anthropic was not, quote, consistently candid in its communications around this launch, which is a very famous phrase from the ouster of Sam Altman a couple years back.
So this seems to have come as a surprise to all of these companies that were partnering with Anthropic. You also mentioned a number of legal startups in there. I mean, talk to us about the conversation you specifically had with executives from Legora, LexisNexis. What did they tell you?
Yeah, so, as you just kind of hinted at, although this first example is with design, Anthropic has been moving into a bunch of different spaces, including legal, and finance. And so, I think on one hand, for the startups that I chatted with, which included a couple, legal AI startups, um, on one hand, they weren't necessarily really surprised just because, you could kind of see the writing on the wall. A lot of them said you can kind of see Anthropic over time moving more into apps. So they kind of figured that this would be coming. But, on the other hand, some of the startups that I chatted with said that they still feel like they do have a big leg up because a lot of the legal capabilities that Anthropic is offering are kind of, tweaks basically to their more generic Claude chatbot. And so uh, the legal startups I talked to said, we aren't just a tweak to a generic chatbot. We are kind of a whole new product that was built specifically for the legal industry. And so we think that we still have that advantage there. Whether this is just cope or not, though, it's kind of hard to tell.
Is OpenAI going to pursue the same strategy?
So OpenAI has also been doing, making similar moves too. So it also offers a lot of, products in the healthcare space, in, obviously Codex, one of its most successful products competes with companies like Cursor and Cognition, and which also buy models from both OpenAI and Anthropic. However, just we did this really helpful timeline of product launches for this piece, and just even comparing those two, you can see that OpenAI has been maybe a little bit less aggressive with moving into like every single industry and vertical out there, which I think has maybe helped them um, maintain a bit more goodwill with customers in these specific industries that are buying models from them.
Now, I wonder how you think about the survival of these startups that are developing these applications. I it's funny because I feel like we're sort of calling demise on both ends here. We're calling demise of the startups that are developing the applications. We're calling demise of we, meaning the world, is calling the demise of the enterprise software companies that had the older applications. I mean, I don't know. Is Anthropic going to be the only winner here? Like, I find it hard to believe that Anthropic and OpenAI are just going to make every single app that everything was going to use. I mean, there has to be competition. There has to be pricing variability, right? There has to be people who specialize in different things. Like, what do you think happens?
Yeah, so I definitely agree with you, Akash. I think despite all the doom and gloom that we're hearing, I do agree that it's very unlikely that, we're going to live in a world where Anthropic and OpenAI are like the only software providers that exist. I think that's for a couple of reasons. First, this isn't really a new story, right? We've seen companies like Microsoft and Google take this really broad platform approach. And despite the fact that they are, companies with just tons of money and resources, they still, are not dominating every industry out there. Like, it's not like Microsoft and Google have become the only software players out there, uh, now. So I think based off of that, we can kind of expect to see a similar trend here. I think the other thing is that even though so far Anthropic and OpenAI have dominated in, coding, for instance, I think that makes a lot of sense, right? Because both these companies, they have tons of software engineers that can kind of dog food their own product. They have expertise in coding and AI research, and it's really important for them to be able to automate coding so that they can, accelerate the speed of AI research, and at some point maybe even automate the process of AI research. It's hard to see that, OpenAI and Anthropic would have any sort of differentiated expertise in areas like legal or investment banking or like accounting, right? Like the average software engineer and AI researcher at Anthropic probably does not know that much about how, accounting works and the workflows of accountants. So I think it's going to be a lot harder for them to be able to compete and offer a product that is like really standout versus startups that are really specializing in those areas.
Right. Well, Stephanie, it was a great story. I encourage everyone to check it out on our website. That is Stephanie Palazzolo, our AI reporter here at The Information. That does it for today's special edition of the show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on TikTok, and on LinkedIn. I'm already excited for our next show on Monday. Have a great weekend. Go Knicks. We'll see you soon.